We are live from Bloomberg's World Headquarters in Midtown Manhattan. I'm Matt Miller.
And I'm Sonali Basak, stepping in for Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the crypto winter chill hits VC funding. We'll speak with Michael Anderson, co-founder of Framework Ventures, one of the earliest and largest venture capital firms in the DeFi industry.
And if VCs are chilled, NFTs are frozen. We'll navigate this competitive landscape with the co-founder of Magic Eden, a rival to OpenSea and the biggest NFT marketplace on Solana.
Plus, bankrupt hedge fund Three Arrows is under investigation. We've got the details as U.S. regulators try and untangle the fallout of this year's crypto crash.
That's all ahead, but first we're going to take a look at the market because even after a rally over 7 days, Bitcoin is back down on the day, down 0.6% over 24 hours. Ether is also down 1.5%, even more than Bitcoin. Not all is bad, though, in the crypto world. Matt, we have Polygon up 1.6% on the day. Projects like Polygon are driving the broader Bloomberg Galaxy Index a little bit higher on the day. But again, there is some weakness here in Coinbase as you're seeing crypto markets and Bitcoin and Ether down 3.3% on the day. I know you're looking at the private markets, though. Yeah,
I'm looking at VCs, and PitchBook put together some research that's really interesting, showing that VCs funding into crypto startups peaked in Q1 at more than $10 billion, but then dropped by more than half, down to less than $5 billion now. It's not hard to figure out why. Obviously, the winter chill, prices way down from where they were at the end of last year, make it a less interesting space. Let's get to Hannah Miller right now, Bloomberg crypto reporter, to ask her the details. So we know why. Hannah, tell us how bad this is.
Yeah, it's pretty bad. This is a reckoning for the crypto industry. Venture capitalists were once white hot on crypto, and we've seen a really steep decline. Once the industry's biggest cheerleaders, VCs, are pulling back for sure.
So is all trouble in paradise here, Hannah? Is there any silver lining here on some folks stepping back? Does it create opportunities for the folks who are still there?
Yeah, no, there are people very much still committed to the space, still hiring. Developers are still finding opportunities to join various startups. And we've seen also a lot of interest in NFT gaming deals from VCs. NFTs in gaming, they're seen as a way to bring the mainstream audience to crypto, to get consumers on board with using blockchain.
That's Bloomberg's Hannah Miller. Thank you so much for your insight. We're going to shift over because last week in Washington, JP Morgan CEO Jamie Dimon had doubled down on his disdain for crypto tokens, but still backed blockchain.
Blockchain is a technology which is real, deployed in many places. We deploy it with Inc., with Onyx, which some of you were part of, and Link, which some of you are part of, and the JP Morgan coin, which is a stable coin backed by a US dollar deposit at JP Morgan. And there are a lot of these technologies going to work. They're going to replace ledgers. They're going to make things cheaper. I think banks will be big users of that. And yes, it may disintermediate certain part of banking. So be it. That we have that problem, like with technology, for the last 50 years. And so my issue has always been with what you guys call a cryptocurrency, which I call a crypto token that doesn't do anything.
Joining us now is Michael Anderson. He's the co-founder of crypto venture firm Framework Ventures. Michael, you heard what Jamie Dimon had to say. A lot of people focus on his critique of Bitcoin, but the other thing he said is that blockchain can disintermediate parts of the banking system. Clearly, you're looking at some of those areas. What are they, and how significantly can they start to change that system?
Yeah, well, I think, the part about blockchain being real, he's completely right. There are a number of different application categories that are built on blockchain today. Cryptocurrency and Bitcoin just happens to be one of them. NFTs happen to be another. We're starting to see the rapid innovation of what these concepts can bring about, not just from a cost savings perspective for existing businesses, but new types of economic transactions that can exist in a new ecosystem that can connect into the financial ecosystem. And you touched on it in the previous segment, but gaming happens to be one of those segments of the market that's just completely new, and a new business model for gaming will bring about a huge amount of economic activity.
He makes an interesting point about the coins, Michael, and I've always wondered myself. I mean, even if you see the beauty in the blockchain, aside from, faith from the group, what's the reason that these tokens should be worth a lot of money, considering the fact that you don't really need even a full token to get on the blockchain, and they're infinitely divisible?
Yeah, well, I think one of the hardest things that we did for ourselves as an industry is called this industry the cryptocurrency industry. What it should have been, maybe crypto commodities would have been a better moniker for some of these assets, but really it's just a new technology platform. There are reasons why tokens need to exist in these ecosystems to secure networks. One of the ways that the proof of stake ecosystem for Ethereum works is you're taking Ethereum tokens and putting them up as economic security to validate transactions and provide security in that network. There is a core reason for that. And Ethereum in particular has a number of the amount of transaction revenue that's going through it every single day is tantamount to something that's a massively scalable and profitable company if it were to be traded on the NASDAQ like a Salesforce or a Workday. So if we look at them from that perspective, there are assets in this ecosystem that are fundamentally valuable.
Or tell us about some of the businesses you're invested in that are doing actual work with the blockchain that has nothing to do with the value of the token. For example, smart contracts or recording events. I mean, what can the blockchain do that you're actually seeing work in your companies?
Yeah, well, one of the companies that we just announced a large Series A fundraise for was Stardust. Hannah Miller, hats off to her, broke that story earlier today. They just raised a new round of funding, which we continued on with our existing investment. What they do is they provide an ecosystem for traditional game developers to develop their games and integrate blockchain just with the ease of integration of an API and some tooling and some infrastructure. We liken it to being sort of the Coinbase for Web3 gaming, where it'll just be the ramps for hundreds of developers who are building in this ecosystem who want to integrate NFTs. And frankly, the integration of NFTs just represents a new business model for game developers. It's not, a speculative fervor as we've seen with NFT gaming so far. The tens of developers that are building on top of it are actually, building and succeeding today. And
Michael,
we're just going to continue to see that trend continue.
I'm really curious about getting a little real about how big this opportunity is. There are a lot of VCs that are looking at the game economy. And does it really only fit for a younger, rising generation? Or is this something that can be built at scale in the nearer term?
Even for old people.
Even for old people like me.
Well, absolutely is the answer. And, just thinking about the games industry right now, this year, $200 billion of revenue will flow through the games industry. That's larger than music and movies and art combined. 3 billion people play games every single month. And our guess is that when you integrate NFTs as a new business model for your game, 90% of the people who are playing this game won't even know that there's integrations for NFTs in the back end. Some people will, and the games will start to deeply integrate the blockchain more and more as things become more decentralized over time. But by and large, most people are going to continue to play their games on their iPhones, and they're going to use in-app purchase via Apple to make purchases of these NFTs in just the same way that they do today.
Now, Michael, earlier in this year, a lot of the overhang had to do with deleveraging in the system, big firms really running into a lot of trouble. But then later in the year, regulation was really the overhang. There are a lot of concerns about a lot of projects and how the SEC will handle them moving forward. For you as an investor, when you see anything from NFTs to DAOs being in the crosshair of regulators, how does that impact the way you might invest in something and your future return of what that will look like?
Yeah, so any new investment, there is more of a regulatory diligence, let's say, now than we had previously. And really, we're starting to piece together and just barely put the dots connected together as to where we think regulators will be in a year or two from now. We're trying to do the best that we can. There's just no oversight. There's no clear guidance. There's nothing that we can go off of to date to say this is okay and this is not okay. That void is causing issues. But going forward, I would say, it has borne out this perspective of what I would call maybe public permission DeFi, where it's still public, it's existing on a decentralized, open, transparent blockchain. The advantages of such are tantamount to a new innovation within financial services, but it's something where you have KYC, you have the controls in place that are required for table stakes regulation, which I think is ultimately going to be the future of DeFi.
All right, Michael, thanks so much for joining us. Michael Anderson there of Framework Ventures. Fascinating stuff. Appreciate your input. I want to quickly give our viewers some breaking news. It seems like the massive meltdown and then melt up in gilts affected every corner of the market. In some senses, even crypto, although Bitcoin remained relatively stable. The Bank of England coming out now and confirming its first gilt sale operation will take place on November 1st. This is interesting because the FT said they may have to push back their quantitative tightening operations. The Bank of England came out this morning and refuted that FT report, and now they're giving us an exact date. The first gilt sale operation, their first quantitative tightening, will take place on November 1st. Coming up, we're going to speak to the co-founder of Magic Eden, a rival to OpenSea, and it is the biggest NFT marketplace on Solana.
And months after their bankruptcy, Three Arrows Capital is still being sought after for billions of dollars. More details ahead.
To access all of the latest data and the news on crypto, check out CRYP Go on the terminal. This is Bloomberg. This is Bloomberg Crypto. I'm Matt Miller, Sonali Bassett, Kaylee Lines is off today. A train wreck has taken place in the marketplace for once coveted digital images. Sonali Bassett has been tracking the bust in NFT. Sonali?
We're looking at the plummet in NFT markets this year as the broader crypto market has come under pressure, both in terms of prices, trading volumes, and also regulatory concerns. Now, analytics firm Non-Fungible tracks a 77% drop between the second and third quarter of this year, with volumes globally falling to $1.7 billion in the 3 months through September. But there have been new heights reached in certain corners of the market. New NFT mints reached an all-time high during 1 week in September, though it was largely due to debuts of smaller collections. That's led to some shifts in activity among the exchanges. One even became a unicorn this year. Magic Eden, which focuses on the Solana blockchain, has expanded market share to 13.4% in September, when it was less than 1% in March, according to tracker DappRadar. By comparison, the world's biggest NFT marketplace, OpenSea, saw its market share drop from 85% to 38% in the same time frame. Magic Eden more than doubled its sales in September, and it has succeeded because the average price of an NFT has been lower on that marketplace. According to DappRadar, that's less than $45 for an average NFT versus more than $80 on the OpenSea over 30 days. Now, people are buying cheaper tokens as they play games instead of looking to invest thousands or even millions of dollars into art they hope will double in price someday. And this all comes as there are real challenges in the market that exist for some of the most popular projects. For example, the SEC is investigating the parent of Bored Ape collections on whether it has violated federal law through digital asset sales. Now, that means the NFT market faces the same regulatory overhang as much of the broader digital asset markets, and it's unclear what it'll mean for the value of those assets in the longer term.
Well, let's talk about that, Sonali. Joining us now is Zhuoxun Yin, a co-founder of Magic Eden. It's a rival, as we've been saying, to OpenSea. It's the biggest NFT marketplace on Solana. Zhuoxun, thanks so much for joining us. What do you think about the huge regulatory overhang? Is that a concern, do you think, for collectors?
Hey, thanks for having me, guys. Look, I think ultimately what we want to see is a very, very robust NFT ecosystem. And I think in some ways, everybody in the ecosystem wants to see, some guidance, some indication of what is acceptable, what's not. At Magic Eden, the way we think about it is we always want to be good actors. We want to be good actors for both the creator economy as well as collectors. And we want to show collectors the most diverse type of inventory as possible. So we've been spending a lot of our time effectively broadening the creator base and broadening the number of tools and ways of discovery for collectors to come and discover NFTs for the first time.
What do you think of the idea that, we went through this YOLO period with way too much money? I mean, investors were bidding up a brick and mortar store that sold video games on compact discs, or, Elon Musk decided, hey, I'll pay $44 billion for Twitter. Is anything ever going to be worth as much as it was at the end of last year, at the beginning of this year?
Look, that's not even probably scratching the surface, right? I think the market has been in the process of correction for sure. And that's NFTs have been, alongside all of that. And we kind of expected this to happen, honestly. And this is in many ways mirrors what happened in 2018, 2019, which then ended up becoming a whole DeFi economy, like broadening outside of that. But interestingly, we've seen some really interesting activity, and this is some of the data that Shonali was showing. We've effectively seen the number of transactions on Magic Eden reach all-time highs in September, just a few weeks ago, and which is interesting because it shows us that the amount of engagement and the amount of user activity on the platform still seems extremely robust. And it's different kinds of NFTs that people are trading now. It's not your hundreds of thousands of dollar Bored Apes, right? That may be part of the market, but now it's a lot of lower value items and other ways of basically entering communities for the first time that I think is really, really exciting. And I think this kind of innovation we expect to see more and more of over the next couple of years, even if the market is the way it is.
Now, you're known for your linkage to Solana. I'm really curious about whether your thoughts have changed about Ethereum at all and how NFTs can operate on Ethereum versus Solana, given the changes after the merge.
Yeah, so nothing too much around the merge. We think there's definitely interesting activity across multiple chains. And so Magic Eden recently launched on Ethereum as well. We launched an aggregated product, which aggregates basically all of the marketplaces on Ethereum. And we also launched a launchpad, which allows creators to effectively come to Magic Eden and drop collections both on Ethereum and Solana. I think we continue to see a lot of really interesting things heating up across multiple L1s and L2s. Right now, we are focused on Ethereum and Solana, but it's also really exciting to see continued innovation on places like Polygon. I mean, they just announced something with Starbucks, which we thought was really exciting, and some of the next generation chains like Aptos and Sweet. I think now that we are in this market, you'll really see the builders come to the fore. And over the next couple of years, we expect a lot of innovation to happen across multiple chains. And yeah, we continue to be very, very excited about it.
Earlier this year, you raised money. You were able to kind of catapult into unicorn status. Do you think that there was a window? Have things gotten tougher out there for those who might be trying to raise money? Do you think that things have materially gotten any worse out there?
I think it's definitely gotten more challenging as an early stage startup, but in many ways, this is probably healthy for things overall. And this is true, by the way, across many, many levels. What we are seeing on the NFT side as well is that creators are also being more diligent about how and when they want to launch their collections. So this correction was probably overall very, very healthy. But at the same time, if you are building now and coming up with new ideas, in many ways, it's also the best time to do this because there's also very, very little noise compared to what it was maybe 6 months ago. So if you are a builder, if you're an investor, if you are a creator, I actually think this is now an even better time to get started. We are also seeing that the people that are still here and will remain here in the next 6 to 12 months will be the ones that are really, really serious about this stuff. And, that's teams like Magic Eden who are, dedicating their entire time to basically building out this ecosystem.
What do you think about the future of NFTs? I mean, is it going to continue to be are they going to be continued to be mainly used for, collectibles, artwork, and that sort of thing? Or will we see real functionality, turn them into tools and titles and deeds?
Yeah, I think we expect there to be a lot more innovation around this. I think obviously the first use case that got product market fit was art and collectibles. That market will remain, in my opinion. I think collectibles is generally something that people find very, very easy to understand. And it's something that allows people access into communities or it provides representation of communities. A lot of people have talked about this on the show already earlier before me, but we obviously spending a lot of time in gaming too. We've continued to see a lot of capital markets activity in gaming, but at the same time, there's also been a lot of infrastructure and tooling built around gaming, and we continue to be really excited about how that is playing out. And we expect there to see many, many more teams launch their games in Web3 over the next 6 to 12 months. We also expect to see new forms of media kind of start to come to the fore in terms of NFTs as well. And there's many, many teams experimenting with ways to effectively get their user bases to have say in narratives, whether it's storylines, movies, TV shows, things like that. We continue to be quite thrilled about the activity we're seeing there. So absolutely, we expect there to be more innovation in the coming months and years.
Very cool as the games and multimedia experiences turn into our universe or metaverse. Thanks very much, Josh Yin of Magic Eden. Be sure to check out our Bloomberg Crypto podcast. It dives deeper than the daily market buzz to explore how this asset class is changing the way we live. Look for that every week through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg. This is Bloomberg Crypto. I'm Matt Miller with Shanali Bassick. Kaylee Lines is off today. Let's get to some crypto stories that caught our attention this week. A new blockchain is live with roots in Meta's failed crypto ambitions, Meta meaning Facebook. Aptos Labs is aiming for faster, more secure transactions and has backing from the likes of Binance's venture arm. The blockchain was designed to handle over 160,000 non-trivial transactions per second.
And then we're looking at FTX and its billionaire founder, Sam Bankman-Fried, because they're being probed by the Texas securities regulator. It's investigating whether the company's yield-bearing crypto accounts are illegal securities offerings. And according to the state, FTX shouldn't move forward with its $1.4 billion purchase of Voyager assets while the investigation is ongoing.
I would hate to be probed. U.S. regulators are prying deep into the remnants of failed hedge fund Three Arrows Capital. The CFTC and the SEC are again probing a range of possible legal violations, including misleading investors about the strength of their balance sheet and not registering with the agencies. Creditors say they're still owed billions of dollars after that collapse.
Where do we even begin with Three Arrows?
Well, the interesting thing to me is not just Three Arrows, but also Do Kwon. It seems like we're starting to build this class of crypto fugitives, right, that are running around the world claiming they haven't seen arrest warrants and not turning themselves into authorities.
But on a serious basis, too, you know, whether they're in Singapore or whether it's the Texas regulator or whether it's the SEC or the CFTC, you have different regulators around the world saying, okay, wait a minute, Three Arrows maybe should have registered here if they were going to take money from people in the United States. The other interesting thing is, did you know that the Voyager CEO is opting to settle negligence claim tied to Three Arrows Capital loans as part of the Voyager digital issues too? So it's all kind of wrapped up in each other.
Yeah, I did not know that specific fact, but you're right. It is all very much intertwined, and that's certainly going to continue. We'll have a lot more stories to talk about, and we will do that next week, every week, on Tuesday at 1 p.m. Next week, Ripple CEO, speaking of regulation and lawsuits, Ripple CEO Brad Garlinghouse joins us. This is Bloomberg.